Yo, what's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. In this video, we are going to be discussing entries. Okay, we're going to be breaking down entries. We're going to be talking about entries that were taken on AUDUSD. I'm going to talk about two different types of entries. Okay, I'm going to talk about my riskier type of entry and then my more confirmed type of entry. Okay, you guys are going to see the differences, pros and cons of both. You're going to see how they both could have suited you. This is a trade that was sent out to my clients within my Telegram channel. As you guys can see, we're currently up around, I think, 50, 60 pips. Currently up around 50 pips. We were up around 66 pips. Currently just a little pullback or whatever. But before we get started, be sure to subscribe to the channel. Hit that bell notification icon to be updated whenever I upload a new video. Hit that like button and feel free to also leave a comment down below. Let's get it. So AUDUSD. Now, before we get into the video, I want you guys to know what we're about to discuss, okay, is all within my entry method, all about entries video within the institutional trading course, first link in the description. All right, so those of you who have the course, I know it's a lot of content, okay, and this video is kind of long, but go watch that video, okay, and that's going to explain to you this entire breakdown. Now, I'm not going to start with the confluences on the higher time frame, okay, just understand that we are at a valid area on the higher time frame. First, we're going to talk about the first type of entry, which all of my clients and students should be in right now, or at least all of my clients within the Telegram channel. Students, I know you guys probably got the 21% trade that took place on the lower time frame, but mentorship or Telegram clients, you guys should at least be in this trade here. Okay, so with this trade here, let's go over the confluences. Now, when I am taking generic entries, I always take my generic entries on the M15 time. I know you guys say, some of you guys say on the M5, M1, you can get kind of lost in the sauce. You don't really know what to look at. That's perfectly fine. It all comes with time and it all comes with practice, but eventually you will graduate from the M15 to the M5, and then you'll graduate from the M5 to the M1, so on and so forth. All right. I even have some students who take advantage of the 15-second time frames and things like that, using the exact same information within the entry method video. All right. So we can see the first entry took place after we have a break of structure here. We have a change of momentum to the downside. Price returns back to our order block, resting here. Okay. We see break of structure. We see imbalance, and we see a liquidity sweep. Price then came right back to mitigate this order block here, right? So this was what I would consider more of a risky entry. Your entry is going to be at the open zone of your order block. Stop loss is going to be above your zone. Okay, and then take profit. You can set your take profits the same way that you usually do. Whether your take profit method is swing lows, swing highs, zone to zone, a certain amount of pips, a certain percentage, things like that. You guys can feel free to set your own take profits. All right. So what happened? Price pushed to the downside. We were up almost 4% here. Okay, then we pushed back to the upside. Remember, I never move my stop loss. Okay, I never move my stop loss. What I like to do is I like to close a certain percent of the trade, so I am risk-free on the trade itself. Okay, but I always leave my stop loss where it is because my stop loss denotes an invalidation zone, which means if price closes above my stop loss, then I know that my trade idea was incorrect. Whether I took a valid zone, valid entry, it doesn't matter. It's a successful trade if you follow your rules. But the trade can still be incorrect even if it was a successful trade. Okay, your bias could have been wrong. Your confluences could have been a little off. Okay, but as long as you are looking for a valid zone and a valid entry, all right, in my opinion, you're good to go. All right, take the trade. Don't hesitate. All right, so this was the higher time frame entry. 11 pips of risk. 11.5 pips of risk, 100.4 pips of profit, and that's going to be, when we finish out, that's going to be around 8.73%. All right, so what is this? First full week in October, starting it off with 8.73%, not bad whatsoever. Currently looking to take a day trade, so I'm looking for price to return to this area. And then we'll see if I see the confluences take a day trade. Just finished up a New York live trading session with my students, making sure they have their higher time frame points of interest and lower time frame points of interest all marked up. All right, this is what you can expect being a part of my mentorship program. Alright, you can expect me to literally hold your hands along the way. Now, let's get into the nitty gritty. Let's get into those individuals who want to see that 2 pip stop loss, that 1.5 pip stop loss, that 20, 23, 25% gain on a trade. That is what I'm talking about. So, of course, we have to bring it back to this area here. So we can see that we pull into this zone overall. Fantastic, great. Price creates equal highs here. Price then sweeps those equal highs with this nice pump to the upside here. All right, then we pull back down. We know that we have some demand resting here. Let's actually change this to a breakup structure. We know that we have demand resting here. Price trades into the demand. Perfect. Beautiful. All right, looks like we could possibly have a demand failure. We're not sure just yet. Okay, price sweeps these highs as well. So we have another breakup structure to the upside. Okay, just barely, but it still counts. Candlestick body closure above previous candlestick body plus wicks. All right. Ooh. Okay. So let's talk about this. So price pulls to the downside. We react to this demand here. Push to the upside. Push back to the downside. Push to the upside just a little bit more, and then finally that failed reaction, which was here, is taken out with price. Point of interest. We have this as a possible point of interest here, and we have this as a point of interest here. All right, I'm not going to go over my confluences on why they're points of interest, but if you guys do want that video, then feel free to let me know. I definitely got you guys covered. Okay, now you could have risked 2 pips on this trade. All right, minimum 2 pips. That's usually my minimum, but recently, believe it or not, I've actually been practicing with 1.5 pip stop losses. Now, those of you who have not seen me post on Instagram a lot, I do get questions, where am I at? Why haven't I been posting on Instagram? Things like that. I've just simply been focused, guys. That's really where it comes down to. I've just been focused. And 1.5 pips as a stop loss is pretty focused to me. All right, there's levels to this, and the only way through is up. So let's keep going. So we can see that price breaks this area here, and we have an area of opportunity to take a trade risking 1.5 pips. All right, now if you wanted to cover these highs, you could just pop that up to 2 pips, and that clearly covers your highs. Okay, so even if, let's say you were going to get wicked in up here, that's completely fine. All right, 1.5 should be good though. So if we play price out, we can see that price plays around, comes right back to our entry there. Wicks us in. All right, now on TradingView, it looks like we have a little bit of drawdown, but this wick here, the drawdown that you're seeing on TradingView, is the wick that would have actually tagged you in, you know, with spread and everything. All right. We play price out, and then you guys can see we tap into this region one more time, okay? And then finally we fall. And more than likely, we were probably tapping into this here, right? This order block here. All right, and then we start pushing to the downside. So let's move this over. All right, now let's talk about targets. So where are my targets? Okay, so first target, of course, you guys know, risking 1.5 pips. Of course, you guys know my first target is going to be this swing low here. All right, second target. You guys can either trade from zone to zone, or you have options. You can target the next swing low. So first target here, second target here, third target here. I'm just following the swing lows, right? So first target was around 13.4%. Next target around 27%, right? And I want you guys to pay attention. We're only collecting 41.4 pips, but because our stop loss is 1.5 pips, using the information taught within the entry method video of the institutional trading course, right? These are the types of trades you're going to be getting into. We play price out, play around just a little bit, and then finally we hit take profit there, right? 27.4%. Guys, that's a month done. In August alone, we hit 27%. September alone, we hit 39%. This is a month done already with one trade, one successful trade. All right. Now I hope you guys were able to take advantage of this if you're part of the mentorship program or if you are within my Telegram channel, second link in the description. All right, currently we're looking at this higher time frame trade. All right, we're just gonna let it play through. It's all about trusting the process, trusting the confluences. All right, so we're just gonna let it play through. It looks like we could possibly be rejecting whatever is here. Price could just fall from here, but I will be looking to take a day trade from this region here. All right, I'm gonna try to upload this in time for you guys to possibly take advantage of the day trade, but if not, then you guys can go back and see if we did indeed react to this and what price decides to do. So yeah, I hope you guys can see the difference between the two entries, two entry methods, the two entry models, whatever you want to call it. I actually have 3 entry models that we talk about within the supply and demand institutional trading course, but just applying 2 of those, I hope you guys are able to see how successful it is. I'm just happy that all of my clients are currently up right now over 5%. What percentage are we up? 4.28%, right? That's almost half an FTMO challenge. And by the time we do hit our full TP, that'll almost be a full FTMO challenge. Within 1 week, clients are able to hit FTMO challenges. Because we're not going to take 10 losses in a week. We only risk 1% per trade. We're not taking 10 losses in a week. So I only took 10 trades total in September, right? I want you guys to think about that. If you take advantage of the information within the Telegram channel, within the course, within the mentorship program, you should be smashing FTMO challenges. Like, you should be crushing them, right? Because this is what takes place on a weekly basis. All right. Yes, we may have a minus 1% week or a minus 2% week, right? But we're never going to have a minus 10% week. It just won't happen. If you're consistently hitting minus 1R, minus 1% over and over and over again, you need to join my mentorship program and you need to sign up for a one-on-one session with me, right? You need to go through the information, you need to go through the courses, you need to go through the educational webinars, and you need to, most importantly, hop on the webinars with me throughout the week. We have Monday night webinars, we have Wednesday night webinars, and we have Wednesday morning trading sessions. So we have 3 webinars per week, okay? But we also have one-on-one sessions, and it's going to be important that you guys take advantage of that, all right? I don't want this video to be too long. Leave a like on the video, subscribe to the channel. I would love to have you a part of my family, and hit that bell notification icon to be updated whenever I upload a new video. Catch you guys on the next one. Much love.